Welcome back to the channel, everyone. It's Nick Armenis here, and here's another episode of my best ASX stocks for the month of August 2021. Guys, before we get into the content, please subscribe, hit that notification bell. Stay tuned all the way to the end so you hear all my stocks. That said, if you don't have time, I do leave timestamps below, so just go to the relevant stock or bit of information and you'll get it right there just below. Before we get any further, guys, please note I'm not a financial professional. This is just me doing some research on my own and then sharing it with you. It's just my ideas. I've got absolutely no qualifications in this space. So please take everything as, I guess, a starting point to do your own research. Theme of the month, guys, and to be honest, since I started writing this, it's probably changed a little bit, but it's, again, Australia's in lockdowns. And it looks like the end of the commodity cycle, possibly even the end of the inflation cycle, or at least people are coming to terms with that it's a bit more transitory. So what do I mean by all this? And the reason I do the theme is, guys, it dictates how I do my research to an extent, because if something is doing bad or good, I look into it either way. So what's going on? I'm sure a lot of you are currently in lockdown in Australia. We've got the Delta variant, so a huge portion of the country now. It's not just Sydney. So last month when I was saying this, it was pretty much just Sydney. Queensland then went into one, Victoria went into one, Victoria's gone into another one now for longer. So lockdowns are back, and are we going to see the things that did well in the last lockdown do well? Is there going to be an unwinding of what's going on? The next bit, global resurgence of new COVID cases. So globally, COVID cases are increasing. It's not derailing anything yet. Everything seems to be opening up, except for Australia, of course. But we've got inflation worries that seem to have subsided. We don't know if, that's going to happen. So when I say, the inflation may be transitory, we just don't know what is going on. Is it going to stay? Is it going to go? Is it going to be a long-term thing? No one knows. But the main thing is we need to know what central banks are going to do, because that can really change the performance of the stock market. All asset prices have really been fueled by cheap credit. And if central banks take their foot off the gas here, particularly growth stocks, they're going to get hit really, really hard in that scenario. And I know a lot of people, especially people that watch YouTube videos, seem to be very heavy in the growth space. And I just don't want to see anyone get completely wrecked in that. So just be careful. I'm not saying it will happen. I don't know. No one knows. But in that scenario, growth stocks, anything with a poor balance sheet, high debt, is likely to get hit. So, that's why I like to focus on really good companies. That said, growth seems to have had a really big recovery of late, guys. Cryptos have been popping. Growth stocks are doing really well. And the other thing I've noticed is it the end of the commodity super cycle? Commodities seem to be struggling a bit of late. I don't know why. They had a really good run, and they're probably just normalizing. But, there's people now coming out and talking about the end of the commodity super cycle. I don't know about that. But it's just something to consider. Our commodities are going to reverse now, and that's all done now. All that massive uptick in prices, and it's now downhill. Who knows? We just don't know. Just something to be mindful of. What am I doing? Pretty similar stuff, guys. Still looking to find high quality businesses as always that can grow, whether or not there's inflation, COVID, whatever it might be. I'm definitely also looking for businesses that can easily pass on any cost increases they're seeing, because there's definitely cost increases out there. I'm sure you're seeing it in stuff. Labor is the only one that, I just don't know. In America, it's definitely getting hit, but here, with the lockdowns and stuff, I don't think that's quite an issue at the moment here. Inputs and stuff, timber, iron ore, any kind of metal, any kind of commodity kind of thing, or anything that requires shipping is going up. Container rates have gone through the roof. Stuff is getting expensive. So I want to see who can pass that on, and that's the sort of businesses I want to be invested in, particularly if I'm buying something new now. I'm still not going heavy risk on, guys, but it does seem like, economies are recovering, and, bar any central bank issue or Delta variant issue, growth stocks should still keep doing well, as far as what I can see. We'll be watching the reporting season just to see what is doing well and what isn't doing well. So what's beating, what isn't, what's the talk out there with costs and stuff like that. So just want to see. I've seen the US kind of response, haven't seen the Australian one quite yet. So now getting to the stocks, some interesting mid and large caps. The first one is Suncorp. I've missed here, the ticker is SUN. So what do? Suncorp offers insurance, banking, and wealth products and services through some of Australia and New Zealand's most recognised financial brands. Really, guys, they're an insurance company, bank second, but all types of insurance, car, home, anything you can imagine. These guys own all of these brands. Most of you probably have some kind of a policy with them. Currently trading at $12.43. It's got a market cap of $15.947 billion. It's traded as high as $13.26 and $8 in the 52-week trading range. It's got a P of 16.14, nice healthy dividend of 6.47. So a good one for those dividend hunters. Main thing that drew my attention to this, guys, both this and QBE, which QBE is another alternative to this. They also had a really good earnings result like Suncorp. Actually, QBE beat expectations by even more, but I often think that Suncorp is a better company overall in my view. Cash earnings were up 42% versus Goldman Sachs' estimate, so they beat it by nearly 60 million, 59 million. Net profit was up 13%, final dividend of 40 cents per share, and a special dividend of 8 cents per share, so you're going to get that special dividend there as well. And then also a $250 million on-share market buyback, so buybacks as well. So what more could you want from a stock? This isn't going to be a massive growth stock, by the way, guys. It's a nice kind of steady, slow grower. It did flag a slower 2022 in their earnings, but expects 2023 to be really strong. So who knows what will happen in that time. But still, financials and insurers are a great hedge against inflation. They also tend to do well as interest rates rise. And these guys have a great suite of brands that are going to be around for a very long time. So as far as businesses go, this is a good business, right? BetaShares Asia Technology Tigers ETF is the next one, ASX ticker Asia. I've been looking at this mainly because of what's been going on in China. So Asia aims to track the performance of an index before fees and expenses comprising the 50 largest technology and online retail stocks in Asia, excluding Japan. So it includes technology giants such as Alibaba, Tencent, Baidu, and JD.com. So some really, really big brands. And the reason I like it, guys, is, you've got exposure just not to one stock, but a whole theme. And it's somewhere that, it's a good growth opportunity where, we've got a younger tech savvy population in Asia. The adoption rates there are much bigger, and the growth of this sector should be even bigger than what has occurred here. Global diversification, so you're not overexposed to just one stock is what I like. So it's trading at $9.93, and obviously the reason it drew my attention was it was as high as $14.36 prior to all this occurring. So quite a big trading range for the 52 weeks for an ETF. So my investment thesis, Asian stock markets have been under pressure due to the crackdown of the Chinese government. You would have seen things like Tencent, Alibaba, the education providers, all of those stocks have been hit really, really hard because of a crackdown, basically against anti-monopoly type things. Similar things happening in the US. Chinese government is just pushing these companies far more than the Congress or anyone in the USA. This leaves us with an opportunity to nibble at a great ETF. I think long-term these companies should be fine, bar the ones that get grievously changed by the Communist Party there. But that's why we're buying an ETF, right? Because we're getting exposure to a broad range of companies, to basically 50 companies. I won't be buying a huge position, slowly adding to this over time, just like I do with all the ETFs. If you're interested in that, watch my ETF videos. It may head lower in the short term, guys. Don't be surprised if this goes to $8. It could very well go down there if this continues to occur. So here are the more interesting higher risk small caps. So I know a lot of you are interested in this sort of stuff, and then that's why I've kind of split this up. If you're interested in higher risk stuff, this is the spot to be in. First one is Pure Hydrogen, ASX ticker PH2. So what does Pure Hydrogen do? It's a Sydney-based company seeking to be the leader in the development of hydrogen and fuel cell technology in Australia. It's currently trading at 19 cents, but its 52-week trading range was as low as 5 cents and all the way up to 44 cents. Currently has a market cap of 216 million. So a really big trading range there, right? So look, I'm trying to find green energy stocks that are in favor that kind of haven't had a huge run up like everything else. Just trying to see something different. Hydrogen is likely to become a key part of a green future, guys. Especially during the transition kind of phase to completely green, where this is, if you want to learn more about it, click this link here because it is quite hard to explain and you'd need to do a whole kind of video on it. And I'm by no means a hydrogen or expert or a chemist of any kind. I'm not great at chemistry, but I do understand that it's going to be a key part. Have a read through that there. The way this company is kind of playing it, it's it's using it in the transport kind of industry, where basically the reason that it is a good alternative compared to other internal combustion fuels that we use, this just emits water vapor, so it's zero emissions when you use hydrogen. They've got some fast refueling hubs that are being deployed, so quick way to refuel. It's very light compared to other fuels, and hydrogen vehicles often have a longer range than traditional vehicles. They're also planning to export their gas overseas, so they're looking at contracts there as well. They're focusing on developing the tech around hydrogen, which, to be honest, guys, I'm really underqualified to comment on. So while I will be doing a deeper dive into this, I do need to do a lot more research before I would ever buy into this, just because I just don't understand it quite enough yet. But initial kind of screen looked good on this, and that's why I'm kind of bringing it to your attention. Especially some of you are probably much better at this stuff, so especially on the science behind it. So definitely one to keep in mind. Have a dig in. Let me know what you come up with on this stock as well. So we've got good updates on recent gas projects, which is the main reason this came to my attention. The next stock that I've actually quite liked, and will probably be the next deep dive I do, is Booktopia Group, ASX ticker BKG. What do? They're an online book retailer. The company also sells a bunch of other stuff, ebooks, audiobooks, DVDs, etc., but mainly a book company. It's currently trading at $2.79. Its 52-week trading range was $2.34 to $3.06. It's got a market cap of $383 million. Didn't IPO that long ago though. So, but why I like it, seems to be growing quite fast according to the latest update. So it's actually ahead of the prospectus. So I recommend if you're looking to buy this, look at the prospectus and stay tuned for the video I do. Revenue up 50%, EBITDA over 500%. But the reason that occurred was they were at a loss, and now it's EBITDA is positive. So there was quite a big swing there. They're moving more units, and the customers are spending more, which is what you want to see in an online retailer. They're the dominant player in Australia, guys. They even sell on Amazon, so you know they're picking up that volume there as well. It's a founder-led management team, which I really like. It's got no debt post the IPO, or at least that I saw, and some cash on the balance sheet as well. They've moved some volume through a new distribution center, and they're always very focused on technology, automation and stuff with robotics, which is going to help reduce costs and increase efficiency, which I really like. So definitely one to keep on your radar, guys. I'm going to do a bit more digging. I know often sometimes you go, why would I want to buy a book retailer? You've got Amazon. Australia is still a market ripe for retailers like this, online ones. So, and it's a space I really like. So I'll be doing some more research on this in a deep dive. Elmo Software, ASX ticker ELO, is another stock I'm looking at. Now, please note, this is one that's far riskier in my view, and lots of things need to change before I consider investing in it. But I'm going to weigh up the risk of, what's the likelihood of this occurring. So let's jump into what they do. They're a provider of cloud-based HR, payroll, rostering, time attendance software. So think, I'm looking at this like, could this be the next Xero? Currently, I don't think it is. I don't think the market is quite as big, but it's a big market. So I do like that. And, it provides organizations with a centralized approach to managing an employee's life cycle from hire to retire. So it's a full suite there, including payroll, rostering, time, and attendance. So lots of data there and analytics for people as well to look at, which is really, really good in this day and age where people are working remotely more and more. I think the market for this is huge. I don't know whether it's execution, the software, what it is, but they're just not executing properly. So I don't know whether it's the problem with the software or the people. $4.67 it's currently trading at, market cap of $417 million. It's traded between $4.2 and $7.44. So quite a big trading range there for the stock. So as I said, be careful of this stock. My thesis is more along the lines of what needs to happen for this stock to say double. It's well positioned for market share expansion, guys, in a structurally growing industry. So it's driven by rising operation efficiency requirements by businesses now. Businesses need to be more efficient, cut out costs, and demand for digital workforce management, as I said, as organizations shift towards greater remote working arrangements. So we need to see retention improve. So it fell in the last update and a decent amount. So I want to see that improve. Can they do it? I'm hoping it was just a blip in the radar. Revenue growth needs to exceed growth in cost. That's a big one. If that doesn't occur, then that's definitely not a good sign, and it needs to flip soon, guys. We need to see revenue start growing more than the percentage of cost to gain it. Otherwise, this is never going to be a profitable business, which is not a good thing. Which means that its product isn't great, right? So we need to see that occur. It hasn't yet. It's taken time. I want to know: is it the people? Is it the software? I need to do more research. FY22 guidance seems better than expected, so the next year's guidance. We want them to smash this for this to kind of pop. Consensus is at negative 0.6 million, but they stated they're going to do 1 to 6 million. So if they do that, happy days. If they don't, it'll get crushed. So definitely one just to keep on your radar. This isn't one I'd be rushing out unless you know more about it. But I'm thinking, can I find the next zero? That's kind of what I'm trying to find. I'm trying to find the next zero and the next afterpay, those sort of things. And I'm trying to find some diamonds in the rough to see that, can this be it? Would love if you know more about this software, please leave it in the comments below. But if not, guys, thank you very much. Please subscribe to the channel, hit that notification bell, and I'll see you in the next one.